Welcome to Virtual Office Hours, Financial Planning for Law Students, sponsored by the American Bar Association and nonprofit AccessLex Institute. The Virtual Office Hours series connects you with experts to help you thrive as a law student and prepare for life after law school. We're really excited today to have Derek Brainard with us to talk about how to create a financial plan that works for you while you're in law school. Derek is a U.S. Navy veteran and Director of Financial Education at the AccessLex Center for Education and Financial Capability. He has worked in both the private financial services sector as a licensed financial advisor, in higher education as financial literacy coordinator at Syracuse University, where he also completed his MBA. His financial writing commentary has been featured via U.S. News and World Report, MSN Money, NBC News, and USA Today. Derek, we'll turn things over to you now.
Thank you so much, and it's a pleasure to be here to walk through financial planning for law students. My goal for the next few minutes with you all is to just impart some tips and strategies, some things to think about as you make your way through law school and creating your financial plan for, if you're just entering law school for the next 3 years, if you're already a current law student for however much time you have left, and then beyond, right? We want to think about financial planning holistically over the life course, and now is as good a time as ever to start learning what goes into a financial plan and what can we be doing even as law students. So this presentation, is brought, the content is brought in part from our Max by AccessLex program, which is the personal finance program for law students in over 175 of the almost 200 ABA accredited law schools use Max. And so you're in good company if you're in that program. We have courses, live events, and Max coaching. And that's all, and that's just one program that we offer from AccessLex Institute. And we're a nonprofit organization whose sole mission is to increase accessibility, affordability to law school. And so we do that through a number of resources, including the Max program. Before we talk about money in any capacity, we want to just remind folks and viewers that the information provided in this event and other Max resources is being made available to assist you in developing your personal financial strategy, and it's not intended as investment, tax, or legal advice. You should consider whether it's appropriate for your needs, and where applicable, seek advice from a professional counselor. If you don't have an account set up at Ask Edna, which is the new education network at AccessLex, now is a great time to do that. You can set up your Ask Edna account, gain access to the portal. If you're at a Max participating law school, you can certainly access Max through that portal. There's also some other resources there: student success resources, bar success resources, Max pre-law. So there's all those programs all wrapped into this one-stop shop at Ask Edna, the education network at AccessLex. So in order to grab your free account and register, you go to askedna.accesslex.org. So let's talk about financial planning for a few minutes. So when I use the term financial plan, so often I get the question of, well, isn't a financial plan something that you do when you have money? Or isn't that just for people who are making a lot of money? And I always have to smile because, as a former financial advisor, I always used to think of those that would come to my office later in life and say, man, I just wish that I had done financial planning sooner. And so the bottom line is, it's never too soon. It's never too early to engage in the process of financial planning. A comprehensive financial plan. What is it? What does it look like? Practically speaking, how can you go from this session here and go and start to establish and use a financial plan? A good financial plan should really focus in on what we call the big 5 financial planning activities. And those include earning, spending, borrowing, protecting, and saving and investing, right? So there's 5 activities that you see here, and a comprehensive financial plan really just wants to address and create goals and action plans in each one of these 5 categories. Practically speaking, this can be a Word document, this can be an Excel spreadsheet, this can be an app on your phone, it can be any sort of software that you might like to use to keep track of goals and to track progress. you can certainly find the vehicle that works best for your style and your approach, as long as you have a section for each one of these big 5 financial activities. The first section should address your earning plan. In school, as a full-time student, you're going to want to be thinking about, what does that post-school career move look like? What does that mean financially? It means, what can I be doing in the summer to get into experiences that might get my foot in the door at a firm? Or what can I be doing during school to network and increase my chances of getting a job offer? How do I increase my skills around job offer analysis and benefits, and looking at benefits while I'm a student? And those are certainly skills that you can work on now in order to get your foot in the door and optimize your earnings down the road. Optimizing earnings also means making the most of the money that you do have coming in. And for a lot of full-time students, that might not mean necessarily regular wages and salary. It could mean freelance or contract work on the side. It certainly could mean if you get paid for a summer experience at a firm or a potential employer, that can, you obviously count that as income. But it could also mean student loan refunds, which is the reality of so many that are attending law school. If you're using student loan refunds to pay the bills and pay for your expenses throughout the year, you want to treat that as income. It's a form of income, even though, yes, technically it's loans, you'll have to pay them back later. You still want to treat it as income in your budget. So you want to track those disbursements when they come in, and you want to make sure that you're calling them income in your budget. And we'll get to this in a moment, but you want to really only borrow what you need to pay your expenses throughout the year, not any more, but also not any less, right? You want to make sure that you aren't stressing about your finances and covering, the basics while you're trying to be a successful law student as well. In school, one of the things you can do when the time comes, maybe not in your first term or your 1L year, but eventually and ultimately, you do want to take advantage of all career service resources at your institution. There's going to be some fantastic folks there and some fantastic resources, and they're going to be able to plug you into situations, into experiences, and connect you with others and professionals, working professionals in whatever legal field you might be interested in, to do informational interviewing, etc. So career services is going to be a great thing to do while you're in law school. But don't forget to also go to events, go to networking events, participate in clinics. If you want to write for law reviews, certainly that's another networking opportunity. Working during breaks is one of the obvious ones that you can do to get your foot in the door in a potential employer. So some of those experiences might be paid and some of them may be unpaid. So from a financial perspective, you want to think about how can you spend strategically throughout the year so that if you need to take an unpaid experience between academic years, you can do that. And that's experience that you may need, or an opportunity that you might want to open the door to a potential future employer. So the second piece of your plan is about your spending. The first piece of your financial plan, what are we doing during school to optimize earnings that are coming in and to look forward to securing an income after graduation? That's your earning plan. The second piece of your financial plan is your strategic spending plan. The number one tool for this is obviously a budget, right? And so if you don't use a budget already, I highly recommend it. It is the most powerful tool for establishing, money coming in. What do you want to be spending it on in the upcoming month? And then tracking and controlling. That's the big piece of budgeting that not a lot of folks stick to, because it can be tedious at first, right? And it can take a little bit of time, but the more that you do it, the more you get used to it, the quicker it goes. If you're sitting down once or twice a week to track expenses through the month, that is the key to effective budgeting. From a spending perspective, you really want to know about cost of attendance. That is your biggest expense as a full-time student, right? It is going to be your cost of attendance, which breaks down into the direct costs that the school bills directly to you and you pay directly to the school, like tuition fees. And on the other hand, indirect costs like living and other expenses that break down into things that you really have a lot of control over when it comes to food and rent, how you're getting around transportation wise, where you're getting books and supplies from. These are things that you can make some strategic decisions in, and those are the big, the big three I think about are housing, food, and transportation. If you can make some strategic decisions in those big three spending categories to save a couple bucks every month, 50 to 100 bucks even, can go a long way. Can go a long way in terms of how much less you have to borrow to pay for those expenses, right? If your main source of income is student loan refunds, if you can make decisions that say, okay, you know what, the cost of attendance number for the school says I can borrow up to this amount in student loans to cover the cost of not only tuition and fees, but all living expenses. That's the purpose of the cost of attendance, which is set by the school. If you can make strategic spending decisions to borrow less than you're able to, so just because you can borrow up to a certain amount, you're saying, I think I can make it by on $100 less than that per month. The $1,200 a year, that's $3,600 over the course of a 3-year legal education. And that's money that you didn't borrow, that you didn't have to pay accruing interest on, which starts to turn into around $4,000 by the time you graduate, right? That $3,600 you're gonna have to borrow turns into $4,000 with accrued interest ballpark. And that can translate into $50 a month on a 10-year repayment plan. So just by making some strategic decisions across those big categories, you can really have a positive impact on your future cash flow, which is really the key when it comes to making these decisions today. When you're living on student loan refunds, when you're primarily using student loan refunds as income, one of the things that you want to really keep in mind is that the cost of attendance is based on a 9-month academic year, not a 12-month calendar year. So what does that mean for you? Okay, so remember, the cost of attendance is the number that you can borrow up to, minus any other institutional grants or scholarships, right? The amount that you can borrow in student loan aid up to cover tuition and fees and your bills for the year. Okay, so if it's based on 9 months, but you need the money to last 12 months, the smart thing to do is when money comes in, when you get a student loan disbursement, is to divide it by 12 so that when summertime comes, if you have to take an unpaid experience to get the experience that you need for your future career, you have some money left over from your student loan refunds to do that for the summer. That is the deal. So that's how you can finance your summer months, is to calculate 12 months of expenses into your 9-month budget, or obviously if you have summer employment where that is paid, it's less of a concern. So that's the second piece of your financial plan, is your strategic spending plan. You want to also set goals and action plans around borrowing in a comprehensive financial plan. So borrowing responsibly means borrowing only what you need to successfully complete law school, not any more. And certainly you can cut down the amount that you need to borrow if you receive things like institutional grants and scholarships or external grants or scholarships. And thankfully, there are a lot of them out there for law students. So one of the things that we did from AccessLex Institute is we created the AccessLex Law School Scholarship Data Bank, which is actually a resource that includes over 800 scholarships and writing competitions, totaling more than $3 million in aid. And these are scholarships that you can go and apply to that are external from your institution. So if you made it your part-time job, quote unquote, to apply for law school scholarships using the data bank, that would be a tremendous use of your time. You can access that by going to accesslex.org/databank. So that's one way to cut down the amount that you may need to borrow for law school. In addition to knowing about how student loans work and how to strategically borrow them, you also want to become a student of other types of debt that you may one day use, like car loans, mortgages, and credit cards. Having clean and accurate credit profile is a very important thing as a law student, given that down the road or maybe sometime soon, you'll be sitting for a bar exam and applying for admission into the state bar. And part of that process can include a character and fitness determination that looks at how you handle your financial obligations. And it may be looking for big red flags like chronically missed payments or bankruptcy declarations, these types of things. So one of the things you can do while you're in law school for responsible borrowing is just check your credit report at annualcreditreport.com. Make sure all that data is clean and is exactly how it should be. And if not, if you see a mistake, get that mistake corrected. Address that by filing a dispute for that error with the credit reporting agency. So again, annualcreditreport.com, pull your credit reports from all three credit reporting agencies, Experian, Equifax, and TransUnion, and make sure everything is as it should be. Beyond that, make sure that you're just avoiding any sort of adverse financial behavior like missing payments on any sort of debts and declaring bankruptcy, things of that nature. Those are things that down the road and during the character and fitness determination process, you may need to explain if it comes up for further investigation. So that's the third piece of your plan. The fourth piece is protecting your vision. And some of the top tools we have for protection of our financial assets are an emergency fund, right? A rainy day fund. Some cash in a savings account or money market account at the bank is a great way to accomplish this. If you don't have an emergency fund of $100 or $200 or $500 in place today, it just means that if something happens, if you have a smaller scale financial issue arise, you're going to have to turn to borrowing to try to solve that problem, which obviously isn't ideal if you're in a stressful situation to go and borrow, and maybe that's even adding even more stress. So the quicker you can get to a baseline emergency fund, the better. And if that means earmarking part of a student loan refund for emergencies instead of having to turn to a higher interest rate credit card in case of emergency, then that might be a good short-term solution. Other more long-term or catastrophic financial emergency solutions include insurance. And that's where you're going to literally have a policy that you pay a premium for each month, and that will help cover you in case of larger financial emergencies. Health insurance is obviously a must. It's one of the most bankrupted debts in America today is medical debt. And so having a health plan that covers you based on your specific situation and needs is an absolute must. Auto insurance, if you drive and have a vehicle in most places, they'll require you to have automobile insurance. You just want to make sure that you have enough, that you have the right amount of coverage for liability and property and collision for that type of policy. And then for your valuables, to replace any valuables due to vandalism, theft, anything like that, you can have renter's insurance, which is a very affordable type of insurance that a lot of folks carry now. That again, you can list out all your valuable possessions, and in case of any sort of damage, vandalism, theft, etc., you can have those items replaced. And again, that can be not very expensive at all. So it's something that's definitely worth looking into, even as a law student. So the fifth piece of your plan is your savings plan. This is where we really get to look forward to the future, towards building assets, towards building wealth, and thinking about saving and investing for long-term success. The most common goals and priorities under this piece of your plan, number one, the first stop should be that emergency fund, just to make sure, again, that you have that buffer between you and whatever sort of smaller term or smaller scale crises might emerge. So having that in place in a liquid account, savings account, or money market account is a great first stop for a savings goal. A second one would be bar exam. The bar exam is a known expense coming down the road, right? That you see on the horizon, so we know that it's coming. And so why not set up a separate free savings account for that and call it your bar fund and start to funnel money over there as you get paid for summer work or as you receive gifts, and start to move some money over there so that by the time the bar exam comes or you have to pay for a bar prep course, you don't necessarily have to turn to borrowing or a private bar loan product. So that's one other savings goal that is very common for law students. Large purchases, obviously, home, car, children's education, etc. These are things that we're going to have come up, right? At one point or another throughout life, we're going to have big purchases, especially if one of your goals is to be a homeowner or have a family and maybe want to pitch into your child's education down the road. There are vehicles to do that in a tax-advantaged way, like the College Savings 529 plan. For a home or car savings, you might use just a straight ahead savings account. If it's far down the road, maybe you think about investing index funds or exchange traded funds or something like that to help you get a boost towards those savings goals. But in any event, large purchases are another goal and a priority for your savings plan. And then the most common investing goal out there is retirement, where you're going to try to build an investment portfolio over your entire career so that one day you can decide, I don't want to actively do this job anymore. I want to maybe live off some of my investments and use those to supplement or replace my income. That's the idea behind retirement. Now, we AccessLex Institute, we do offer many resources and educational resources behind these items and everything that you've heard in today's presentation, especially in the Max by AccessLex program. As part of that program, to help you take your first steps into building your financial plan, there is Max coaching. If you are at a Max participating school, you can take advantage of this. This is a 30-minute free phone call with an accredited financial counselor. You can use it as many times as you need. There is no limit. If you're at a Max participating school, you just set up your Max coaching calls through askedna.accesslex.org and enter Max, and you can schedule a call there. If you're not at a Max participating school, you can also access free coaching with an accredited financial counselor through Access Connects, which is our free student loan helpline. And to set up those calls, if you don't have access to Max, simply go to accesslex.org/accessconnects, and you can schedule a 30-minute phone call with an accredited financial counselor. Again, no limit on that. Please take advantage of it as you are developing your financial plan that addresses the 5 big categories: earning, spending, borrowing, protecting, and saving. I want you to create that plan with confidence, but I know that it might be tough to do the first time on your own. So please feel free to lean on us and use us as you'd like. We are here to help you walk through that. So again, thank you all for your time. As I kind of give you a high-level overview of financial planning for law students, I know we talked about a lot in that 15 minutes, in that 20 minutes. So use the resources available to you to follow up at askedna.accesslex.org. That's the education network at AccessLex. Thank you so much, and I'll take any questions that are coming in at this point.
Sure. So we do have a question here about how does being married or in the process of a divorce affect your financial aid?
Okay, yeah. So when you apply for financial aid for higher education, you're going to be using something called a free application for federal student aid, the FAFSA, right? And when you fill that out as an undergraduate student, so you're considered a dependent of your parents, right? And so in that situation, your parents' income and your income, if you have it, is all counted towards your estimated family contribution. As a law student, you are now considered independent, which means that FAFSA is going to look at your income, or if you're married, your household income in that regard to determine what is your estimated family contribution. Now, the student aid, the federal student aid that's available to law students is really non-need-based aid, unsubsidized direct loans, and graduate plus loans. So it may not have that big of an impact. Where it may come into play is, institutional aid, institutional scholarships, institutional grants, any sort of thing like that, where you want to make sure you update your institution. If you do have a change in your marital status, you should, during the year after you've filled out the FAFSA, give financial aid a call and say, hey, I'm going through the process of a separation or divorce, so I just need anything that's based on my household income from an institutional perspective to be updated. And so you might have to file an appeal to have them do some sort of professional judgment to do modifications to your budget to make that change. So that's it. The short answer is contact financial aid and let them know what's going on, and that's the first step there.
All right. This is probably like a loaded question though, but how much time should we give ourselves to pay off our loans?
Oh, that's a great question. And the answer is it depends, right? But I love how we're thinking about this, because that is part of a good financial plan, is thinking about what is your loan repayment timeline and what's your debt payoff date. If you can start to think about, as you're borrowing, what repayment plans are available to you on the back end, then you're going to feel more informed and more confident about your borrowing. And those repayment plans come in a couple different flavors. The first of which is kind of your standard plans, right? And this is for federal student loans. For private loans, if you have private student loans, then those repayment terms are going to be set by the private lender. You don't really have a lot of say in those. There's not a lot of flexibility in that. That's just set by your lender. On the federal side, there are plans that are the 10-year standard plan, all the way up to a 25-year extended plan. Or you can apply for income-driven repayment and choose from one of about 4 plans currently that will make your monthly payments based on your actual discretionary income. So those plans, if you stay on them for the maximum term, can last up to 20 to 25 years. So as you can see, it really depends on your situation, whether your goal is to, get out of law school and make as much money as possible and just totally pay off of the debt as fast as humanly possible. You can certainly do that. You can pay your loans off in 2 or 3 years if you have the resources and the drive to do it, with no penalty. There's no prepayment penalty on student loans. But if that's not your situation and you need to take advantage of those income-driven repayment plans, that's why they're there, right? So you can take advantage of them. It just might take you longer to either get out of debt or have something like public service loan forgiveness, which is about a 10-year program if you do it for the 120 months straight. So really varies, but that's why we offer Access Connects and Max Coaching, is so that you can schedule those calls, talk through your specific situation, and we can kind of go through your list of options with you.
Great. Well, thank you. I think those are all the questions that we have today. So we want to thank everyone for joining us, and a special thank you to Derek and the AccessLex Institute. We hope you'll join us for upcoming virtual office hours programming. So visit abaforlawstudents.com for the full lineup. Take care, everyone.
Thank you.